Let's start your investment journey.
Hi and welcome to another edition of our weekly market outlook report for the week starting Monday the 4th of January. Welcome to first full trading week of 2021, which will start on Monday with China, UK, US and also Canada manufacturing PMI and OPEC meeting in Vienna. Moving on Tuesday, we should pay attention to German retail sales and unemployment, which will be followed in the afternoon by US ISM manufacturing PMI data for December. Chinese services PMI followed by US ADP unemployment, which is expected to come in at 159,000 from previously published 307,000. Also, services PMI, factory orders and FOMC minutes in the evening will be closely watched on Wednesday. On Thursday, the day will start with Australian trade balance data. That will be followed by Eurozone retail sales for November, which is expected to come in at 1.2% from previous much better 4.3% figure. And preliminary consumer price index for December, which is expected to stay unchanged at 0.2. That will be followed in the afternoon by US trade balance, jobless claims and ISM services PMI data for December. The week will finish on Friday with probably the most anticipated data releases, which is unemployment. It will start with Eurozone unemployment for December, which is expected to creep up higher to 8.5% from previous 8.4%. That will be followed in the afternoon by US non-farm payrolls, which are forecasted to come in at 100,000 jobs created in the last 30 days from previous already low number of 245,000. Unemployment. US unemployment rate is expected to increase to 6.8% from current 6.7%. Also, Canada unemployment rate is due for December, which is also forecasted to increase to 8.6 from current 8.5. Now, let's take a look at few markets. Let's start with the DAX or German 30. It's nicely uptrending, although in a daily time frame we are seeing a bit of a consolidation here. This overextended market conditions, new all-time highs, 13,830, 13,900 level. That's a current resistance on the upside. A breakout above that level and a retest from above is required for the continuation of this bullish move higher, targeting additional resistance towards 14,000. Alternatively, if we see a controlled pullback, lower initial support to the downside is close to this 20 period moving average at 1344, 13,450. Cluster of these previous highs from September and also here from November and December time. So pullback to that level and a rally would be bullish, or pullback to that level and a loss of that level from underneath. Retest of that level could open the way for a gradual move towards additional supports at 13,350, 13,230. Dow Jones Wall Street bullish breakout higher. Santa rally came in. We are currently trading at new all-time highs. Current resistance is at 30,650. Breakout above that level could open the way for the continuation of this upward move. Resistances on the upside are very difficult to pinpoint because it's uncharted territory. So 30,700, 30,800, possibly even 31,000. Why? Why not? Because it's another milestone to be reached. Alternatively, if you see a pullback, key trading level to the downside is at 30,320. Loss of that level and a retest of that level from underneath could open the way for a gradual move lower, targeting additional support at 30,200, possibly even 30,060, 30,000 to the downside as a support. Gold, a bullish breakout higher. US dollar weakness. We have the sequence of these slightly lower highs. Key trading level going forward is at 1900, a psychologically important level. Breakouts above that level, a retest from above as a newly found support could open the way for a spike higher, targeting additional resistance at 1911, 1913. followed by 1927, 1934, possibly even 1950 as these high here. Alternatively, if we see a rejection at 1900 and a big selling pressure that could open the way for a corrective move lower, targeting additional support initially at 1880, followed by 1866, followed by 1850 to the downside. Euro dollar, massive bearish reversal here in a daily time frame with this engulfing candle forming. Key trading level going forward is at 123. A rally higher and an end of day close above 123 is required for the continuation of this upward move, targeting resistances at 123.40, 124, possibly even 125 over a longer period of time. Alternatively, if you see a continuation of this selling pressure and a loss of these previous highs here and lows at 121.70, retest of that level from underneath as a newly found resistance, that could open the way for a deeper corrective move, targeting 121.20, possibly even 120.70. Cable bullish breakout higher. Key trading level is at 135.50, 135.70. As long as that level holds, bulls are in charge, potentially opening the way for a gradual move higher, targeting resistances at 137.50, 138.50 to the upside, where the price would meet this falling resistance trend line in a daily time frame. Only a breakout above that level could open the way for an additional move higher towards 140, 141. Alternatively, if you see a dip lower and a loss of these current lows, that could open the way for the retest of this rising support trend line and support at 134, followed by 132.70. Dollar Japanese yen, clearly downtrending market. The price action is creating lower highs, lower lows. It's capped by multiple moving averages and multiple trend lines. Key trading level going forward is at 103.80. Rally into 103.80 and a rejection or a loss of these current lows could open the way for continuation of this selling pressure, targeting additional support at 102.80, followed 102.50, 102 to the downside. Alternatively, if you see a rally higher and a breakout above 103.80, that could create a short squeeze, targeting additional resistance towards 104.40, possibly even 105, where the price would reach daily falling resistance trend line and also the cluster of these previous lows here. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.
Let's start your investment journey.